is what you need to know about assumed balance. Assumed balance or sale with assumption of mortgage is basically buying a property through loan or equity assumption. Now, I feel that this is a very relevant topic to discuss, especially during this pandemic where we have home buyers that have lost their jobs or got displaced and can no longer continue with their monthly payment. Now, this basically leaves them with three options. First is forfeiting their rights to the property and losing their investment. They lose everything. Second is if they have already paid at least 24 months down payment, they can demand 50% from their total payments to be refunded, and that is covered under the Pasalo law. But if you want to get more out of it, watch this video and learn. Hello Real Estate, George here, Unit Manager from Filipino Homes and a PRC accredited and DHSUD registered salesperson under license number 00219880. And today, we will be talking about everything you need to know about the third option, and that is the assumed balance. But before we proceed, if you are new to this channel and have not subscribed yet, now is the time to hit on the subscribe button and the notification bell so you will be notified for any future videos coming up from this channel. So, how does the assumed balance work? To simplify, let's say the value of the property is 5 million pesos and there's still an outstanding mortgage debt of 2 million pesos. The buyer may pay the seller 3 million pesos plus premium if applicable and assume the obligation to pay up the remaining debt of 2 million pesos to the creditor. Now, there are a lot of reasons why buyers would want to have their property for assume. It can be because, as I mentioned, they lost their job and wanted some cash on hand. It can also be because they moved to another location or they need cash because of some family emergency. They call it a sacrifice sale or a distress sale. Now, this is the type of transaction that is often unplanned and you are forced to be flexible and don't have much leverage, making you open to even lowball offers. The other scenario is where the assumed balance is actually part of your plan. You buy a property at its introductory price or pre-selling price, and after a few years of construction or when the value of the property have increased, you have somewhat assumed the remaining balance and the buyer pays you lump sum plus premium. Now, this is a type of transaction wherein you have more leverage and can demand premium because you can afford to wait until a better offer arrives. Now, you can assume balance in two different stages. The first is during the equity period. Now, this is the period where construction of the property is still ongoing and you need to go through the developer. Now, you need to pay the transfer fee or the redocumentation fee, and that is usually around 20 to 30,000, and sign the waiver of right to signify that you have waived and transferred your rights to the new buyer. Now, the new buyer will then pay the reservation fee and submit the same requirements subject to evaluation and approval by the developer. But please check with your local developers on their guidelines because there are developers that only allow their transfer to their first level of consanguinity, like your parents, spouse, or siblings. The second stage is after the loan takeout or during the amortization process. This is the part where you are already paying monthly amortization with the bank, Pag-ibig, or in-house financing. Now, there are two ways to go about this: the easy but risky way or the harder but safer way. Now, let's start with the easy but risky. This is called an internal agreement where transfer of ownership only happens upon full payment. So even if the buyer takes over the payment and even moves into the property, the name of the property is still under the seller. This can be an option for buyers that have money but don't have financial documents needed by bank or Pag-ibig or have been denied with a housing loan before. They do this to avoid complications in the contract or the new loan process. This can come in the form of a deed of conditional sale between the buyer and the seller. And if you prefer this option, just make sure that both parties act in good faith. The next option is the harder but safer way. This is the immediate change of ownership. To do this, you need to execute 3 documents. First is the deed of assignment. This legal document is one of the important documents in the loan assumption process because it is stating that the seller is transferring the contract's obligation and benefits to you. it will also include an outline of the terms and conditions you and the seller agree on. Then you need to process the notice of assignment of contract. Since this involves a third-party lender or creditor like a bank or Pag-ibig, you need to notify them in writing about your agreement. This is very important so that they will know that moving forward, you are the one settling obligations and receiving benefits. And the last needed document is the deed of sale with assumption of mortgage. This is a document expressing the buyer pays the seller and the buyer now owns the responsibility with the assumption of mortgage. The buyer will then take over the mortgage payment until the property is fully paid. But to be guided properly on the needed documents and on how you can assume the loan, you need to check with your creditor. And it goes without saying that you should have a competent lawyer drafting or reviewing these kinds of documents to make sure that you are safe from any potential risks. Now, let's go and explore the other side. Why do buyers buy properties with assumed balance? Now, I know there are buyers that think that for assumed properties are properties that are not desirable because the owner don't want it anymore. But to an investor, this is an opportunity. And here are the reasons. First is because they are looking for ready for occupancy properties. Now, I know there are some buyers that are not comfortable investing with a property they can only see on a piece of paper. They want to see the actual structure first before committing. Second is buyers want to buy a property that have lower price than market value. This usually applies to properties on sacrifice or distressed sale because the seller wants immediate cash or can no longer afford to pay the monthly amortization or have moved to another location. Third is buyers can skip the bank or Pag-ibig documents and approval process. This is where the buyer assumes payment and the transfer of ownership to his name is only when the property is fully paid. Now, to make sure your assumed balance experience is as flawless as possible, make sure that you know what you want from the get-go. Where is your preferred location? How much spot cash can you pay to the buyer? And how much can you afford for the monthly amortization? And of course, before you commit, make sure that you have to check the actual property. Check all the documents, receipts, and other proof of ownership as well. So, there you have it, and I hope you learned something new. Once again, this is George Ryan Sermago, Unit Manager for Philippine Homes and a PRC accredited and DHSUD registered salesperson. Thank you for watching. Stay safe, stay at home, and peace.